All right, we are welcome back to our class. You're welcome back once more. Today we are going to be looking at a question that was sent to me by one of my students um, that's running a master's program and wanted me to look into his account that was given to them. So to make it easier and easy for them to understand and comprehend. And in our lessons, we try to make accounting very simple, very interesting for everyone, up to the highest level, middle level, and even beginners, so that it's something that they will understand and enjoy as well. So accounting doesn't look like a chore to anybody. So today we are looking at cash book. So before we go into solving of the cash book, like we always say, you can help to promote our channel. How do you promote our channel? If you're a first time viewer, you can subscribe to our channel, like our videos, turn on the notification bar for more live updates. You can also help us by sharing our videos, our content to other persons that you know I need of this knowledge. Don't just keep the knowledge to yourself. Don't just keep this understanding to yourself. Don't keep these secrets to yourself, because we make it very simple. So share it with others, let them see, let them benefit, and let them have understanding of what we are doing. Thank you so much for doing that. Then coming into this is a cash book. And we always say that when you are given a cash book to enter, for example, the question says open a cash book for the following transaction. They will never tell you, because we have three types of cash book. They will never tell you the kind of cash book to open. We have the single column cash book, we have the double column cash book, and we have the three column cash book. Now you'll be asking yourself, a question has been given to me. How do I understand which of the cash book to open to enter this transaction? I'll make that easy for you. We've done videos on cash book before. You can go back to our backlog to see some of the videos we've done on single column, double column cash book, and even three column cash book also. Now, if you are given a transaction that just involves cash transactions, meaning that every of your customers paid for their goods and services in cash, or you bought goods as a retailer and you bought goods from your suppliers or wholesalers and you paid in cash, just know that you are opening a single column cash book, because a single column cash book caters for only transactions that were paid for immediately services was rendered or goods was exchanged between the retailer and the consumer. Then and in a single column cash book, we have 8 columns. Double column cash book have 10 columns. The difference is that you have a bank column in the debit side and a bank column in the credit side. What do we do when we have a bank column? It means that there are certain transactions that you did not receive cash payment. Those transactions you receive check. Now, when somebody buys goods and gives you check, or pays via mobile transfer, or uses a point of sales to make payment, what would you say? You didn't get cash, but that money was received in your bank account. So because it was received in your bank account, you record such transactions under the bank column. Now, the reason you are doing that is so that when an auditor is vetting your account, the auditor will be able to ascertain how much you have at hand and how much you have at bank as a business. Then the third one, double column has 10 columns. So the third account is the 3-column cash book. Now this is where you have discount, where in your business your supplier gives you discount, and then you also give discount to your consumers or your customers. Now in a situation where you see discount on the question, you will have bank, you will have discount, meaning it's a 3-column cash book we are preparing. Now look in this question. There's something interesting. January 26, it said, sold on credit to Mr. Udi a length of khaki for 40 naira less 10% trade discount. Now, seeing trade discount there means that I'm opening a 3-column cash book, because I must make provisions for what? I must make provisions for discount. Now, another rule that is pertinent when entering or posting into a cash book is that only cash transactions are recorded in the cash book. Meaning, if I bought a good, a product from a retailer and I did not make prompt payment immediately, that particular transaction will not be recorded in the retailer's cash book. It will be recorded in the sales day book. The sales day book is a book that is open to record for credit transactions. Now, if I return the goods back to my retailer and maybe the good does not meet standard or is bad, is spoiled, what happens is that the retailer will open a sales return or return inwards book, and vice versa. If the retailer returns to the supplier, he or she will, the supplier will open a return outwards book. The retailer will open a return outward book because that goods was returned back to the supplier. Now, if the retailer also bought goods on credit from the supplier, knowing that he's a debtor to the supplier, he's going to open a purchase day book, meaning that that particular goods was bought on credit. Now let's come straight into our account. Before we go, this is a free column, and remember we said the free column cash book has 12 columns. Now we have to know what is entered in our columns. The first one is our date, when the transaction took place. The second one is particulars, that is the transaction that took place. Third one is folio. Folio means that in this transaction, if there is a page where it was entered into in the ledger, it will be recorded under the folio. Say these goods was recorded on page 30 of the ledger. So here I'll put page 30 against that transaction. So that when an auditor is vetting your account, it is easy for the auditor to trace that particular transaction to the original ledger where those transactions were first entered before they were called into the cash book. Do we understand? For transparency, simplicity, and accountability. Then another thing that is recorded under the folio column is contra entry. Any transaction that has debit transaction and credit transaction, meaning it will be posted in the debit side and in the credit side. Let me give an example. We drew cash from bank. Meaning you are reducing the value of what you have in the bank and increasing the value of what you have at hand. So cash at bank is reducing, meaning that I'll credit our bank side, and then I'll debit our bank side, and then I'll credit our cash under the debit column. I'll enter the transaction in the cash column under the debit column, and enter the transaction in the bank column under the credit column. Do we understand? So, and then once we do that, we put a C under the folio column to show that that particular transaction is a contra entry. So when an auditor is vetting, we know this particular transaction also replicated under the credit side, so that there will be balance. You will know why the value of your cash increased and why the value of your bank reduced. So after folio, we have discount. Now, because this is the debit side in cash book is used to record income, meaning your sales is under the debit side. So your discount you are recording here is a discount allowed, because you are giving people, your customers, discount whenever they patronize your business. So we have discount allowed. After that, we have our cash and we have our bank. Then we replicate what we have here on the credit side. So this is date, particulars, folio, discount, received, because you are buying, so it's your supplier that is giving you discount. Discount received, cash, and bank. Now, let's take a look at our questions now. Read the first part. Say, a man started business on 1st January 2020 with a bank account of 1,800. In account, we always know that when you start a business with a financial asset or a fixed asset, know that that is an income. So it is recorded because it said with a bank balance. So it will be recorded against a bank column. And since it's starting business, that is capital. So our date is January 1st, and it's capital. And how much capital does it have? In the bank is 1,800. Great. The second one, January 2nd, draw and cash a check for office use, 300 naira. So if you look at this critically, you will see that he drew and cashed a check, meaning what happened? He took cash from the bank, meaning cash at hand is increasing, and then what is reducing? Money at bank, cash at bank is reducing. So because our cash at hand is increasing, we'll record it here. January 2nd is a contra entry. Bank, you got payment from bank, and what did you got cash of 300 is a contra entry. Come here, January 2nd, you received cash from bank 300. So this is how we record our contra entry. So the giving will be in the credit side and the receiving end will be on the debit side. Great. So January 3rd, he said he paid for insurance. He paid insurance by check. Now, if you pay insurance by check, 30 naira, is that an income or expenses? You can guess that it is an expenses. So it's going to the credit side. So I have January 3rd. Our particulars is insurance because he paid for insurance and he paid by check. So we record it under the bank column, 30 naira. Great. Now let's go to January 5th. Now this is actually very interesting. I have to go through all the questions in order for me to point something here. It said bought from Peterson and Co. Limited, 240 yards of silk at 25 kobo a yard and 400 yards of khaki at 40 kobo a yard. Ordinarily, we would have just entered this into as purchases into the credit side. But when looking at it, if you come down, January 27, it said settled Peterson and Co. Limited accounts by check and received 5% discount, meaning that this particular transaction was not paid for as at January 5th, the time the transaction took place. Because from this question now we can see that on the 27th, that was when payment was made for this particular transaction. This is why it is always very important for you to go through all your questions, go through the additional information before you start solving. It makes it easier for you to take notice of certain things on the questions in order for you not to miss out on any details. There is no meaningless details when it comes to accounting. Everything is very important. So looking at this now, ordinarily January 5, you can record it where under purchase day book. Remember I told you that every credit transaction goes into the purchase day book if you are buying, and if you are selling and you sold on credit, it will go to the sales day book. But we are not going to enter January 5th on our cash book because there was no cash transaction that was made. It was a credit transaction. Instead, we are going to enter January 27 when we get to January 27 because we are entering our cash book following ascending order from moment of occurrence. So we skip this. Mind you, we are coming back to this. January 7, sold on credit to Mr. Etuk, 120 yards at 35 kobo a yard. Now, are you going to record credit sales in the cash book? No, we are not. Now, if you look, we'll also come back to, I think there's a part in the question where Etuk paid for this particular transaction. So we are not entering this. This can also go into the sales day book because it was sold on credit. We'll go to January 9. Cash sales paid into bank. So we got a cash sales here, January 9. Sales. Sales is an income and it was paid to where? To the bank, 102 naira. Good. Then January 11, bought goods for cash, 100 naira. So I have January 11 purchases, 100 naira cash. Got a paid cash. Then January 13, we drew cash from office. This is an expenses, is a drawings because you are removing the cash that you have in your office. Now, if you are removing the cash that you have in your office, it is an expenses, goes to the credit side, which is January 13, we have drawings as our particulars. And the amount we have as drawings is 40 naira cash. 40 naira. Then January 15, it said Mr. Etuk returned 10 yards of sick. Mind you, this is Mr. Etuk, right? Now let's do something. Mr. Etuk returned 10 yards of sick, right? As damaged and sent check in settlement of outstanding balance. Meaning out of these 120 yards, 10 yards was returned as damaged. That 10 yards will then go into our return inwards book. Return inwards book. Now on this particular account, then we have out of 120 yards, he returned 10, meaning that he paid for 110 at what? 35 kobo per yard. So what do? We multiply by 0.35 in order for you to know how much was paid. So you see now, I didn't record January 2nd. I'm recording it against January 15. So January 15, when payment was made for this particular product that was sold to Mr. Etuk. So January 15, I can put Mr. Etuk because he paid for that particular product. Now I'm going to calculate 110 multiplied by 0.35, that's 35 kobo. It will give me 38 naira 50 kobo. And he paid by what? He paid by check. So I'm recording it in the bank. 38 naira 50 kobo. Use your calculator, you get 38.5. 0.5 means 50. So we have 38 naira 50 kobo. Then we are done with this and this now, right? So we go to January 19. Bought fittings for cash. So it's coming here. We bought fittings. Cash. How much? 56 naira. So recorded on that cash, 56 naira. Then January 23rd, cash sales to Daffy paid into bank. So we have January 23rd, Daffy or sales, because the person that paid, who got the receipt, his name is Daffy, and he paid into bank 126 naira. We have 126 naira. Then January 25th, he said, bought from GB Limited 400 yards of white at 17.5 kobo a yard and paid 30 naira by check. Now, mind you that we are buying from this particular person now. Do we understand? But we are not paying for the full amount. Now, if we go to our purchase label, we can record this, but minus 30 naira as money that has been paid, and the remaining balance will go there. So what we are going to do is that we'll record G&B Limited and 30 naira paid to G&B in our cash book, because this is what is important to us, cash transactions that were paid. So knowing that is an expenses, we'll come here, January 25. We paid who? G&B Limited. We paid the sum of what? 30 naira by check, meaning it's an expenses on the bank. Then 26, sold on credit to Mr. Udi a length of khaki for 40 naira, less 10% trade discount. But because it's on credit, we'll hold on to this for now. It's not coming into the cash book. January 27, settled Peterson and Co. Limited by check and received 5% discount. Now, what we are going to do is this. He wants to settle this person. Now, let me put this. January 27, Peterson and Co. Now, what do? When we have Peterson and Co., what do? We come back to this place. Remember, this is very important. Remember, I said there's no meaningless details in accounting. In this, when he was making back, paying for the particular goods he got on credit, he was given 5% discount. Meaning we'll calculate the cost of this and then we'll remove 5% discount from it. So how much did he pay? We have 240 at 25 kobo. I'm going to do 240 multiplied by 0.25. Then I'll do 400 multiplied by 0.40. Then from the amount I have, then I'm going to do 5% discount. So come with me. I have 240, 200 and multiplied by 0.25. This will give me 60 naira. Then I have 400 multiplied by 0.40. This will give me 160 naira. If we add, this will give me 220. Now that we know that the actual price for this particular product is supposed to give to Peterson and Co. is 220 naira, there is 5% discount. So 5% discount, which is 5 over 100 multiplied by this. So I have 220 multiplied by 5 divided by 100. Sorry, 220 multiplied by 5. Okay, let me just do this. I don't know. This is 0, 0. 5 year 1, 5 year 2, 2 year 1, 2 year 11. So 5% is 11. So I'm going to do 220 minus 11. This will give me 209. Great. I don't know, calculator, it's mixing up. Good, thank God we can do this calculation. So Peterson and Co, he received a discount of 11 naira, and then instead of paying 220 naira, he paid 209 naira. So I'll record by what? Check. So I'll record it against the check. Bam, 209 naira. Great. Now we come down 28. Paid wages of 22 naira and sundry expenses of 18 naira cash. That is an expenses. January 28. We have wages and sundry. So I'll just add them together because the transaction was made on the same day. 22 naira plus 18 naira, that is 40 naira. So this will give me paid by what? It paid by cash. So I'll record the 40 naira under my cash column. Then January 29, he said Mr. Udi settled his account by cash and was owed 1 naira 50 kobo discount. Where is Mr. Udi? Sorry. You know, we have to do a lot of back and forth on this. Mr. Etu, cancel. Etu. Dafe. Okay, good. This is Mr. Udi. Now, remember, he said that Mr. Udi bought a length of khaki for 40 naira and got 10% discount, right? So 10% discount on 40 naira is what? Is 4 naira. Then we do 40 minus 4 will give me 36 naira. Meaning that at this point he was supposed to pay 36 naira, Mr. Udi. Then in this place now, the day, January 29, Mr. Udi settled his account by cash and was owed 1 naira 50 kobo discount. So what am I going to do? I'll minus this is discount. I have 36 naira minus 1 naira 50 kobo. From it, this is 0, this is 5, 10. 10 minus 5 is 5. 5 minus 1 is 4. So the money Mr. Udi paid us is 34 naira 50 kobo. And Mr. Udi paid by cash. So here we have January 29 received from Mr. Udi cash payment of 34 naira 50 kobo. Do we understand? Now the next one, we have cash sales, January 30. Cash sales. Or I can just leave sales. Cash sales is 152 naira. 152 naira. Then the last one, this is a little bit technical, but we need to understand what we are doing. It says bank balance of cash in hand remaining in office only 100 naira. Bank balance in cash remaining in office remaining only 100 naira. Now let's close first. I want to do something here. Because this will affect our balance. Alright, now I have 300 plus 34.50 plus 152. Now, if we add all of these now, this will give me 486 naira 50 kobo, right? Now, I'm doing that because I've seen this. The balance here is not up to what we have here. Okay? Now, what we have here is, if we calculate, this is 100, 140, 180, 180 plus 56. That is 236, right? Sorry, 486 naira point 50 kobo minus minus 40 minus 56 minus 40. Now, when we minus this from here now, we are supposed to have a balance of 250 naira point 5 naira. 250 naira point 5 naira. Yeah, about that. Sorry. 200, I'm trying to drop this. 250 naira point 5 naira. Now, looking at this now, come back to this question. It said bank balance of cash remaining in office only 100 naira. Meaning that in this place now, balance brought down. Instead of us to put 250 naira, he said we should remain only 100 naira. So what do? Minus 100 naira from here. If you minus 100 naira, this will give me 150 naira point 5, right? So the balance we will have here is 100 naira. And then we'll bring close with this 486.50 naira. Now this 450 naira point 5, he said we should bank it. To bank it meaning that we should put it under the bank segment. Do we understand? So yeah, I will put banked, because when you put in the bank, it increases the value of the money in the bank. Banked cash brought down, we have 100, so I'll put the 150, 150.5. Do we understand? Because it increases what we have here. 150.5. Now we'll add all of this together. We'll take the calculator. Now I have 1,800 plus 1,800 plus 102 plus 38.50 plus 126 plus 150.5. It will give me 2,217 naira. 2,217 naira. Now, out of this 2,217 naira, I'll add all of this together. I have 300 plus 30 plus 30 plus 209. That will give me 569. Now I'm going to subtract it from here so that I'll know my balance brought down. 500, sorry, 2217 minus 569. That will give me 1648. Now if you add with this, it will give me 2217 naira. So my balance carried forward so the balance we are carrying to our next accounting year will be, I'll bring this down, will be 100 naira in cash and then 1648. Now the reason why we did that, where we have 150 naira 0.5 that was banked, that increases the value of what we have in the bank, is because normally our outstanding balance brought down from cash is supposed to be 250 naira 0.5 naira. But because the question said we should bank a balance of cash in hand, remaining only 100 naira in office. That is why we subtracted 100 from 250 naira 50 kobo, and the 250 naira 50 kobo was what 150 naira 0.5 was what was remaining when we removed 100 naira. That is why it was there, because it increases now the value of what we have in the bank. So this brings us to the end of our lesson. If you have any question, don't feel free to contact me on the comment section, and don't forget to patronize our page, our channel, like our videos, subscribe to our channel, share our videos, and turn on the notification bar for more live updates. Share our videos to people that you know needs this knowledge. As you know, we try to make our accounting easy, simple, and very, very, very understanding to you. So for once, thank you so much for watching, and thank you for viewing our channel. God bless you. Bye.